Gold just hit its highest price in human history. Again and again. It's been doing this all year. That alone would be interesting. But here's the strange part. The US dollar is still dominant. Treasury yields are strong. The Federal Reserve remains the most powerful central bank on Earth. Nothing looks broken on the surface. So why is the world panic buying a metal that doesn't pay interest, doesn't generate cash flow, and doesn't do anything at all? Something is off. Or something is coming. Let's break it down. It's late 2024, early 2025. Gold is trading well above historic norms, not spiking briefly, but climbing steadily. This isn't retail speculation. Central banks are buying. China, India, Poland, Singapore. Not quietly hedging. Actively reallocating. At the same time, the dollar hasn't collapsed. Inflation is cooling. The treasury market still functions. So what's really happening? The answer is trust. Not collapsing. Fragmenting. To understand that, you have to understand why the dollar is powerful. It's not just America's economy. It's the system. Global trade runs through the dollar. International debt is priced in dollars. Foreign reserves are held in dollars. This gives the United States enormous privilege. It can borrow cheaply. It can print money. And the world absorbs it. For decades this worked. But systems don't fail suddenly. They fracture. The first fracture came with sanctions. In 2022, Russian central bank assets were frozen. Hundreds of billions of dollars. Locked overnight. It was effective. And it terrified everyone else. Because it revealed something uncomfortable. Dollar assets aren't neutral. They're conditional. If you fall out of favor, access disappears. So countries started asking a quiet question. What happens if we're next? They didn't revolt. They didn't abandon the system. They diversified. And the safest asset outside politics is gold. You can't freeze it. You can't sanction it. You can't cancel it. Then there's debt. US government debt has reached levels so large they barely feel real. But the interest is very real. Servicing that debt now costs more than national defense. And the only way to pay it is by issuing more debt. That works as long as confidence holds. But printing money to cover obligations slowly erodes value. Other countries see that. So they hedge. Not against collapse. Against decay. Finally, alternative systems are emerging. New payment rails. Local currency trade. Early experiments outside the dollar. They're not replacing anything yet. They're building exits. Here's the key point. Gold isn't rising because the dollar is weak. It's rising because the dollar is powerful. And power, when used unpredictably, creates fear. Gold is not an investment thesis. It's a signal. A thermometer. And right now, it's telling us the global system is running a fever. The dollar may remain dominant for decades. But trust is no longer absolute. And when trust fragments, gold rises. Not loudly. Not suddenly. But relentlessly.